We're going to be talking about Autonomy today. That's a big UK software business that was bought by Hewlett Packard back in 2011 for $10.3 billion. And there's all sorts of juicy things that happened around the transaction and since. A huge write-off, a big fraud investigation, extradition to the US, and sponsorship of a dodgy football team. So Tom, what do you know about Autonomy?
Well, that dodgy football team was the first thing I became aware of Autonomy. They were sponsoring Spurs, but Spurs perhaps less dodgy than Arsenal. But let's not go there. You referred, Ben, to a write-off. Now remember that Hewlett Packard paid $10.3 billion. And 18 months later, they wrote off $8.8 billion of that investment. That is a massive write-off.
And such a short amount of time afterwards. You can't really say the business has, the performance has fallen off a cliff over that period. Or perhaps you could. Well, what went on, Tom?
Well, I think you've got to look at why they would have paid such a high sum of money for that investment. And it was because the valuation of software businesses like this is often done on a key figure of turnover. And what would have happened a year afterwards is that there would have been a lot of goodwill in that acquisition because they're buying basically a software company, so a lot of intangible assets, and goodwill is subject to an annual impairment review. So in reality, when they had bought the business, they realised the future cash flows, they realised the recoverable amount, they realised the present value of the future cash flows was nowhere near what they had expected it to be.
So is that because the business fell off a cliff, or is it because there was something dodgy going on?
I think it was because something dodgy was going on with the way that Autonomy were reporting their revenue in the build-up to the sale.
Okay, so they should have been recognising revenue in line with performance obligations. So as performance obligations are met, you are recognising the revenue on your software contract. Is that not what they were doing?
It's not what they were doing. I mean, there's always an element of judgment about when you sell something, when you fulfill that performance obligation, and they were pushing the envelope there, clearly. But they were bringing revenue forward. They were reporting this quarter, this year, sales that were really being made in the future. They were even falsifying the date on the invoice. So that's just straightforward wrong.
Okay. So that's basically fraud, isn't it? It's dishonesty if you're backdating invoices to justify this year's sales. But they're reporting these numbers. I mean, obviously they must have been reporting great numbers then to the market.
Every time. They did a forecast, they made a prediction as to what their revenue was going to be, and every time they hit that target because they realised it was so important to their business valuation, their exit strategy, to hit that revenue target. So they were doing that. Now maybe, just maybe, that's a red flag maybe for the auditors to pick up.
Well,
where were the auditors here?
Well, and there's various angles with this. So there's the auditors of Autonomy who should have picked up on some dodgy things that they were doing, and we'll explore that a little bit. But there's also KPMG who were doing the transaction work on behalf of Hewlett Packard. Perhaps they should have been picking up some of these things. But just as a sort of standing back point, any business that consistently hits its targets, and it wasn't just hitting them, they were beating them by 4% every time. Now, to consistently be beating your revenue targets by 4%, that in itself is come on, that's not realistic. You know, every business has ups and downs. It's a bit weird to say we just consistently beat our targets.
And what Ben has demonstrated there is the application of prudence, is the application of skepticism. That's what he's pointing out there.
So Tom mentioned about the auditors. Deloitte were fined a record $20 million for their complicity in what went on with this, not with the transaction, but with the audit of Autonomy's figures.
Complicity is quite a strong word. What I think, what was going on was there was some sort of roundabout transactions whereby Autonomy was making sales, but only making sales because they were buying goods that they didn't really want. So there was such a roundabout of transactions, which the auditors should have picked up on.
Yeah, so these transactions were to resellers. So they're basically selling their software onto a third party who, to encourage them to buy it from them when perhaps they didn't really want it, they were saying to these third parties, we'll purchase some things from you that we don't really need. And we'll just kind of absorb those into our costs. And we're not worried about those costs so much because the important thing for our valuation is that we hit our revenue targets. So you get your mate that runs a reseller business, one of your customers, they buy things they don't need from you because you are going to buy some stuff from them in return. And this is one of the things that Deloitte were implicated in, they should have picked up on, that there was $28 million worth of hardware costs. These were things that Autonomy was buying from these resellers as part of this recycling transaction. And Autonomy was reporting those costs as sales and marketing expenses so that they looked genuine. So it wasn't some dodgy transaction where I'm only buying stuff because that person I'm buying it from is scratching my back and buying some of my product. And Deloitte didn't pick up on it. And not just was Deloitte fined $20 million for their role, the individual partners involved were fined. The lead partner was £500,000 and another partner involved with the engagement was fined £250,000.
Hang on, Ben. That sounds a lot of money. $500,000 fine for an individual to pay. I mean, that would bankrupt me. But do you think it bankrupted the individual partners?
Well, as an audit partner at a Big Four firm in the UK, £500,000 is probably a year's earnings for you. So maybe it's not like I mean, it's a material sum of money, right? But it's not going to perhaps put you under. But both of those partners were, they were with the ICAW, that's where they had their qualification, and their membership of their chartered accountancy body was rescinded because of their role with this. So it's not just the fine, it's the impact on their reputation and their earnings potential in the future that would be particularly damaging.
And so it's not so much the accounting regulation that was wrong here, but it's the way that the individuals abuse the system. It's also, I think, tied up with the business valuation on revenue. But Ben, you talked about the fact that there would have been due diligence. There's another firm involved here because Hewlett Packard were basically a manufacturing company, and they wanted to get involved in this new software business. So surely they would have commissioned some due diligence report. Tell me about that process.
Yeah. So it's actually our old employer, KPMG, who did the work. And when you go in to do due diligence as part of the transaction, you're going in and looking at the up-to-date figures of the business and its forecasts and giving an opinion on them. Do they look reasonable, or are the judgments that are being made here overly aggressive? Now, KPMG did raise some red flags in their due diligence report.
So that would have been picked up then by the people who were buying, by the directors of HP, surely?
You would think. But it's come out in the subsequent investigation that the chief exec at Hewlett Packard hadn't read the latest financial statements of Autonomy and had not read the due diligence report.
What's the point in paying for it then, to have someone check it?
Yeah, so they have to do a due diligence. They have to get that work done as part of the transaction because Hewlett Packard is a big listed organisation. So listing rules, if you're going to buy a business, you have to get a proper due diligence report. But what you do with that report is up to you. And the decision maker at Hewlett Packard trusted his gut rather than reading the detail of the report. I mean, it's quite shocking that.
It is, because they're paying $10.3 billion of the shareholders' money, and 18 months later, and that's cash that goes out, that's a real sum of money, and 18 months later, 8.8 billion of that is written off in an impairment. What a loss of value, what a destruction.
And who loses there? It's the shareholders in Hewlett Packard. So they're the big losers here. Who are the winners? Well, in the short term, it was Mike Lynch, who's the guy that owned Autonomy, who pocketed a huge slice of that $10.3 billion. I'm saying in the short term he was a winner, because in the longer term, he's been found guilty of serious fraud in the UK. And because HP is a US business, and lots of the people who lost out here were US investors, he's actually been extradited, or he's in the process of being extradited to the US to face fraud charges there. Now, whether he is actually extradited or he's able to appeal that, we don't know. But longer term, there's been some pretty serious consequences for Mike Lynch. So what are the lessons out of this, Tom?
The lessons out of this, I think, are to do with ethics, more than to do with the accounting regulation. The ethics are to do this. If you've got a job, you should do it properly. And the job of a chief executive officer who has commissioned a due diligence report, at least they can do is to read it.
Yeah, absolutely. And if you are making decisions, huge strategic decisions like that, yes, there always has to be a little bit of gut feel, but you've got to make an informed choice using all available information, and that patently didn't happen here.
And there is a risk involved in auditing, isn't there? That if you're auditing businesses, you've got to be diligent. You've got to be looking out for. Not everyone is honest. That's the point. Not everybody is honest.
Yeah, and that's a professional skepticism point that Tom raised earlier. It's about having an inquiring mind. It's about not believing things, taking them at face value, challenging them, and demonstrating robust, proactive professional skepticism.
And maybe also the lesson is that they shouldn't have sponsored Spurs Football Club.
Maybe that was a red flag. Okay, thanks for listening. I hope you found this one useful and interesting, and we'll see you in a later edition.